Hi guys, welcome to our blog. This is Rodrigo from Costa Rica. I'm David from Vienna, Austria, and together we form a group of people. We call ourselves the Super Geeks.
Bear with us. This is our first video explaining a case. We're going to touch about the Tolaram Innovating Africa case. First, we're going to look at the PowerPoint slides and we're going to present you our point of view. I think this will help you if you already did the case and you want to see another point of view. If you didn't have the chance to read the case and you want to have a quick overview, or if you just want to remember the case a couple of years from now.
We are super happy to hear from you, your opinion, what you might have done differently or what you agree. So bear with us and join our trip.
Awesome, guys. Like I said, feel free to leave any comment on how can we improve.
What is this case about, Rod?
Tolaram Group has a strong market share in Nigeria, and they're considering if they should expand to the rest of Africa. They have they have three different options to where to go and how to do it. So we're gonna go take a look at the company real quick and see our recommendation. Start with the company overview. We're gonna go real quick on the first couple of things, and we're gonna focus on the recommendation. But just for the guys that forgot to read it or didn't have time, we're gonna do a real quick overview.
Okay, thanks Rod. So if we look at Tolaram, we look at a company that was founded by Seth Tolaram in Malang, Indonesia in 1948. However, the current headquarters is situated in Singapore and has a presence of over 18 countries worldwide. The company is privately owned. If we look at the vision, Tolaram has a strong value proposition in trying to offer products that are affordable and available to everybody. Furthermore, they are in sectors active such as textiles, manufacturing, real estate, infrastructure, banking, retail, and e-commerce. The core values of Tolaram are trust, respect, commitment, courage, and humility.
The milestones of Tolaram's history, like Dave said, it was don't forget it was founded in 1948. They did their first textile manufacture in 1970. Then in the 1980s, they started to diversify in all the sectors that Dave mentioned. In 1988, that's when they introduced the noodles, which is the focus of our case, focusing on the noodles segment of their business into Nigeria in 1988. And then in 1996, they did a joint venture with Salim Group, which allowed them to build their own company, their own manufacturing company in Nigeria. That was their first manufacturing company in Nigeria. In the 2000s, it's when they started doing their vertical integration, forward and backward, all the way forward to the retails and all the way backward to the manufacturing of the raw materials. And this is when their revenues really started to increase. As for them, why do you think they have succeeded for so many years? Well, I think their main pillars of success are, number one, perseverance and patience. They lasted over 10 years till they actually had be profitable and had revenues of over 10 million. Even multinationals, competitors left due to the low volumes present in Nigeria. They still kept fighting. Number two, adaptation. They have carefully selected each of their products and their vertical integration when needed, like I mentioned earlier. And number three is human capital. Nigeria has strong, heavy educational problems, and they focus on largely on investing on human capital. They train their employees heavily, and that makes them have a low turnover and they also have a strong corporate social responsibility. Now Dave's going to continue with the frameworks analysis.
All right, thanks Rod. So let's continue with the 5C analysis. We're looking at context, company, collaborators, customers, and competitors. So let's start off with the context. Tolaram's expansion relies heavily on interregional communities. This is the first point. When they enter a market, they also look at the urbanization rate of the country, which is crucial to their success. Also, they clearly distinguish between short-term and long-term investments, as the long-term investments turn out to be rather net present value positive than any short-term investments lower than 10 years, smaller than 10 years. As the long-term investments turn out to be more profitable for Tolaram. What Tolaram tries to achieve is to invest in on a long-term basis and ignoring any possible political instabilities, as it was the case in Nigeria when they entered. Furthermore, they enhance female participation in their workforces, which is a very unusual factor if you look at Africa at that time. In addition, they analyze the market according to the population. So whatever population is growing and young is attractive to Tolaram. And last but not leastly, they check the spending power of the countries, which is, in Nigeria's case, pretty much increasing. Looking at the company, in 1995, Tolaram created a joint venture to get the rights of manufacturing, of branding and selling in West Africa. This was a key milestone, as Rod already explained. Also, it is needless to say that Tolaram was able to create the noodle market in Nigeria. They were the first one to move in and build on the first mover advantage. They also managed to achieve a vertical integration of all operations, owning the supply chains in every aspect. Since they entered Nigeria, they had a 6.5% annual growth rate, and they can be regarded as the dominant player that can charge a premium in this market. Okay, let's look at the collaborators. We see that there is 20,000 people working for Tolaram in Nigeria. Furthermore, the Salem Group, together with Tolaram, created the United Foods Industries Limited, and together they opened the first instant noodle factory in Nigeria. What is left to say about collaborators is that there's high investments in human capital. Looking at the customers, the instant noodles industry is a 1 billion industry market in Nigeria, according to data from 2015. The success factor for instant noodles in Nigeria is driven by women starting to work and thus having less time to cook for their families, and are prone to buy instant noodles or other quick meal possibilities. The target market are people that live in urban areas. That's why Tolaram always looks at the urbanization rate upon entering a country. Tolaram captures a 75% market share. However, the growth possibilities seem limited at this point of time. And this is what leads us to competitors now. As Tolaram started with almost no competitors in the market, and as we said, built the instant noodles market in Nigeria, other competitors have joined the fight for market shares. Currently, there are 17 competitors playing in the market of Nigeria, which has turned somewhat from a blue ocean into a red ocean.
Yeah, you can just take a look at them here.
Yeah, you can just take a look.
We're not gonna tell you each of the percentages, but you can just go ahead and look at them. We're gonna give you a second. Yeah. Okay, now guys, this is a Porter Forest analysis of the noodles industry in Nigeria. Starting with the suppliers and buyer power. Well, there is a high supply power in Nigeria, but like I said, they vertical integrated and created their own raw materials. Thus, as for Tolaram itself, there is a low supply power. As for the buyers as well, there is a low power, considering this is a business to consumers segment. Number two, the substitutes. There are many potential substitutes. However, there is a low actual threat, considering this is a product that is really cheap in comparison with your other options available in any marketplace. Competitors, traditionally, this was a low competition segment. Like Dave said, we took advantage of the first mover advantage. But now it's increasing. We're in 17, and it's still increasing. So, as for competitors, it's a low high. For the entrants, there are new entrants through new major trends. They see that there's a possibility. However, there is a high ex ante barrier. There's a lot of capital expenditure needed to be done. A lot of economies of learning. You'll see in the case they mentioned how Tolaram sent one of these best guys from Singapore all the way to Nigeria to live for a couple of years to understand the market itself. So it actually takes a lot of economies of learning and capital expenditure. Let's look at the results. So for the results, We do not have low entry barriers, like I said, high economies of learning and high capital expenditure. We do have relatively low forces if you vertical integrate. If not, the suppliers are going to be always a high, and we do have a low powers of substitutes currently. They are increasingly net revenues. They're increasingly constant increase. However, they took them over 10 years, like I said, to get an actual profit. And like Dave said, their dominance in the market allow them to have a premium as a product. They're they're now, it used to be a low post entry competition. Now it's increasing. However, I wouldn't consider it high considering their position in the market. So like this brings us to a top dog sector. The noodle industry is very challenging for new entrants, but once you're in it, it can be very comfortable for occupants.
Okay, so let's have a little SWOT analysis here and look at the strengths, weaknesses, opportunities, and threats of Tolaram in Nigeria. So, looking at the strengths, we see that Tolaram managed to have a complete value chain integration. That means they own the manufacturing plants for all major raw materials, retail shops, logistics, ventured into infrastructure, energy, and digital services. Furthermore, they have the capability of working in emerging and informal markets, which is a pretty big thing in Africa. If we look at the formal or informal distinction between markets, Tolaram totally managed to understand the informal market. Furthermore, they are privately owned. That means they can undertake risky decisions, which gives them the opportunity of higher returns. And looking at the values, as we already mentioned, the trust, respect, commitment, courage, and humility are core values of Tolaram, and they stick to that. And we regard it as a serious strength of the business operations. They also have a huge know-how of how business is done in Africa. Coming to weaknesses, we have come to see that some executives are a bit worried that the company might have lost its pioneering drive, something that Tolaram has been good in the past years. Another weakness might be the high commitment that it needs to undertake a positive NPV project. As we already stated, in Nigeria, it took them more than 10 years to become profitable. Okay, so looking at the opportunities of Tolaram in Nigeria, we can see first and foremost that there is a growing demand of instant noodles in the market. Africa is the second largest continent with over 1.1 billion people living there, which gives Tolaram the opportunity to expand. Furthermore, there is trading blocks and regional communities within Africa that facilitate the ease of trade with low export costs, which might add a lucrative opportunity to Tolaram. However, we also have to look at the threats that Tolaram is facing. For instance, the Nigerian market has showed signs of being mature and that future growth is maybe limited. Furthermore, the political and economical instability has to be mentioned here, as Africa is often a soil of political troubles and even conflicts, or even armed conflicts. We experienced in the past lapses in the supply chain. Also, there is a poor access to electricity, poor infrastructure and education. As you might remember from the case, Tolaram had a problem with electricity plants as the electricity stopped. Tolaram had to build its own electricity power plants to ensure the manufacturing process. Furthermore, we have a growing competition, as already mentioned, and high monetary investments needed if additional business projects are undertaken.
Okay, guys, this is a country analysis. Just bear with us. We just have this in the recommendations. As for the country analysis, we made a framework based on the weights the case or Tolaram group itself wanted. This is not the ordinary cases, like they said in the case. They usually would consider income. They usually would consider GDP as a strong weight, but in this particular segment and this particular industry, they chose these specific segments factors and with these specific weights. As you can see, we got Ethiopia as the winner, Egypt second, close, and then the rest are as of Ivory Coast, Kenya, and South Africa. They're a little bit farther down. Ethiopia is a clear winner by more than 10 basis points, with a 93 million in population, a youth population of 41%, almost the highest after Kenya in the 5 countries we are analyzing. The urbanization rate is second highest. We got the GDP growth of last year. This was the highest of all by far, with a 64%, and as well as the female labor participation, which is really high, is 78%. This is really interesting, guys. As you can see, Ethiopia is the clear winner. However, you can see their per capita GDP is clearly the lowest in between the 5 countries. So why? Because GDP is only the 5% of the weight, and this leads us to our recommendation. Our recommendation, we have 3 options in the case. We get the first one is to stay in Nigeria. However, it may be too saturated, and thus may not be able to meet the 2020 revenue goal of 2.2 billion. The third option, let's look at the third first. The third option is to only enter South Africa. However, ignoring Ivory Coast would be a bad strategy for Tolaram, considering their current distribution infrastructure. What does that mean? It means that Tolaram already has their infrastructure set for distribution in Ivory Coast. They distribute other products, but however they haven't included the noodles, so it would be a terrible idea. Now let's look at the second and why we chose this one. The second is to enter Kenya, South Africa, and Ivory Coast. And the case specifically tells you to choose which one do you want to enter first. So we would enter Ivory Coast first. First, because of the current distribution, the case clearly explains that all the executives recommends Ivory Coast and agrees to start with Ivory Coast. Then they are in the ECOWAS regional community, which is the highest community of all, with 301 million citizens. You can see it in the picture in the red. Second, we would go with South Africa. Why? Some people, some other groups mentioned that South Africa has a high infrastructure, a formal retail opportunity. However, and Tolaram Group as a whole, their core advantage and their core business has been always based in informal retail. But the executives clearly mentioned their need to enter the formal retail. It's inevitable. The Africa as a country and as a continent is growing itself, and it will eventually become a more formal retail. So they think that they in order to become a Pan-African company, they need to understand that formal retail. So what best option to enter the South Africa South Africa, a country with the highest GDP and the highest infrastructure, but also they have the SADC regional community, which allows them to have 234 million citizens of over all the countries, as you can see in the map, in the blue and in the green. And last but not least, we got the Kenya. We would be the last to enter Kenya, because of their presence of terrorism. Currently, you have seen all the attacks that have happened, the mall, everything. So we'd want to set that one for last, and because they have the COMESA potential, which is what you can see in green, and in yellow, of course, green overlaps as well with the South African SADC. However, as Group E, if our personal recommendation, and like I said, this case there has no right answer. Our personal recommendation is they should stick with number 2. However, I would change Kenya for Ethiopia. Like I said, I want to go back here real quick, and in the other slide you can see why we chose Ethiopia as the third one. is the country analysis winner, and as you can see in the map here, we would still be have one of the countries in the regional community we would be missing out, COMESA from Kenya. But don't forget, in the case they said that Ethiopia is about to sign the agreement with which will allow us to be in COMESA. So basically, we would have the win-win of being in COMESA and not having the terrorism. Yes, Ethiopia has had some political problems, but that's something, like Dave said, that's something that we're used to, and I think that Tolaram would be better off dealing with political problems than with terrorism. That's the Tolaram Innovating Africa case. Alright guys, that was it. I hope you guys liked it. Please leave comments on how can we improve to make this better for you and for us.
And we hope to see you on our next vlog as well, Super Geeks.